Ugh. Bro, I look like dog shit. Yo, 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 yo. What's going on? Oh, God. Damn, chat. Did you miss me? Good breakfast? Nope. Didn't have it. Finally back with those cigarettes. Yep. Yo, JH, good morning, man. Detmed, good morning. Good afternoon, I mean. Fuck. Most of us were watching Matt. I'm so sorry for your loss. Remember how yesterday we were going over this? And I was like, hey, it's doing this fucking thing. And it keeps shrinking. Look what it did. Look what it did today. It's doing another one right now. Goosey. Lol, the Debbie Downers are out in full force today. I wish Matt was on so they would go there. Yeah. I mean, look, I get it. I'm frustrated too. Trey gave me some wisdom a little while back, and so have some of you guys. And it's just people trying to vent, which is understandable if you're being adult-like about it. Some people take it too far, but to each their own. Because it is frustrating. It is extremely frustrating. Fuck. Yeah, let's see if this gets the hard balance. Yo, Unseen Gore with the 2 months. Thank you, man. Watching and waiting. Me too. Oh my fucking god. Yeah. It's the same thing. It's the same thing. It feels like it's never ending, and then out of nowhere it just fucking takes off. Yeah, everything's fucking. Spy's doing like eh. It looks like there was a there was a bit of a sell-off this morning on Spy. So I don't know if the market is just still reacting to shit. I kind of have a feeling that Spy uh, is not representing whatever the uncertainty is in the market very well. Give me a second, chat. Yo, Scott, good morning, man. How's it hanging today? Hanging by a thread. I'm hanging by a thread. I'm doing good, though. Yeah, it's just doing the same shit. I'm doing the same shit. This pattern's really weird. This is more GME-esque than it is AMC. We didn't see these very often back in January through June. Go check Vortex real quick. Was I watching Matt's live too? No, dude. I was watching a MILF on... Wait, what? I was watching a MILF in my dreams. My brain's still booting up. I went to type in fucking AMC into Ortex and I typed in MILF. Here's something weird. So the what the fuck is wrong with me? The utilization fell off like crazy. It hasn't been this low since the run up. It's at 72, 72%. What the fuck? I hate that I have to watermark these, but people take these fucking screenshots and throw them up on Reddit like, look what I found! What was that? 72.8%. So, I wonder what GMAs is showing. Flat. But, okay, so, do I want to use the drawing pad? Fuck it, I'll use the drawing pad. How is that possible? Yeah, I'm about to explain. Where's my pen? There's my pen. Okay. Okay, so utilization, Jesus fuck. I don't remember if there's two L's or one, is equal to used divided by available. Because this is also equal to a percentage, right? Let's break this down into Latin real quick. Per means iterative. Cent equals 100. And edge is a descriptor, loosely speaking. I don't know what the Latin terminology is for that. I know what it means, I just don't know how to break it down into its more pure definition. So if utilization is equal to 100, fuck me, that would mean that if there's 100 shares available, you would need 100 shares being marked as used. If this drops to 99, this would equal 99% utilization. Because it's all a percentage. So what this means is that there's two ways this can go. And this is, again, why I've been trying to get Ortex to give us some more information, but unfortunately they're not listening to me. So if we have used over available, and you multiply that by 100, if our used remains the same, roughly, right? Let's just assume that it's the same because for what we're all observing, nothing's really changed for us, if that makes sense. So the amount used is still the same, but the amount available has gone up. That's the only way that you can make that number drop. You're dropping it via the denominator, which is your pool of what's available. So that's really, really strange. I wish Ortex would show us what those numbers are. I mean, we have this one, but we don't have this one. I'm sure there's some simple algebra you can do, but TLDR, someone has marked their shares as loanable. Someone big, I guess. Someone has ponied up shares. So does that make sense? You guys need to remember that Ortex is showing reported data only approximately. Yeah, I 100% agree with that precaution. My only rebuttal is that it's not the data itself. It's not the values of the data that I'm worried about. It's the behavior of it. Gotta cut that up real quick. Give me 1 second. More shares available. More shares available to be lent. Utilization goes down. Yeah, but that fluctuates. That's also something to keep in mind. Someone could just be like made a video about toxic assets. Uh, if AMC is about to experience volatility, then someone would want to get that off their books. If you're an institution, you don't want to have volatility uh, in your whatchamacallit. You don't want that to influence your beta, especially right now with what appears to be a lot of market uncertainty just coming out of nowhere. You do not want uncertainty on your books, even if it's a good thing. Institutions aren't concerned about 100x gains. They're looking for bite-sized, consistent gains. So when they report at whatever interval they do, whether it's quarterly or semi-annually, they don't want to have anything on their books that could come as a surprise, if you will, even if it's a good surprise. The shares that Adam Aaron sold have been made available for loan. Popcorn salesman sucks. No, literally not mathematically true. Literally not mathematically true. He did not. The SI was reported at just shy of 100 million. Okay, the SI just dropped 20 some percent. He didn't sell that many shares, Bucko. And even if he did, it doesn't. People need to understand that the case for all of these stocks has nothing to do with the SI. It has nothing to do with the fundamentals of the company. It's very simple. It's very binary, actually. It's pretty cool. If there are more shares shorted than that of which were authorized and issued back at the company's IPO and throughout all of their historical developments, if the amount of shares shorted exceeds that, they are now good to go. They will squeeze at one point or another. It's just plain and simple. Plain and simple. How does lending it get off their books? Wouldn't that mean they should sell and not lend? No, and this is where negative interest rates come from. You want to retain ownership, but you don't want it to reflect on your P&L. Does that make sense? It Even if you still technically own it, because you have given it to someone else, they have all of the exposure. The only exposure that you now have is whatever you're charging them in interest. When they return the shares, whether it's you recalling them or them doing it on their own behalf, that's when you regain that exposure. Love when you're explaining shit instead of entertaining Discord degenerates. Feels like a DFV type stream. I try to keep a balance. I try to keep a balance. When we're having good days, I'm gonna be more high energy about shit and try to keep it really really fun. But on days like this, we're still gonna have fun, but the understanding of everything is what gets you through this, and it's not easy to understand. And a lot of people think I'm a fucking whiz kid or whatever, and I appreciate that, but I'm still learning a ton. But the learning that I have done has been tremendous in help. What are you talking about? Wait, what? Trash talking the people on the Discord? No, Mr. Creeman. Where's my pen? There's my pen. Okay. Okay, so utilization, Jesus fuck. I don't remember if there's two L's or one, is equal to used divided by available. Because this is also equal to a percentage. All right? Let's break this down into Latin real quick. Per means iterative. Cent equals 100. And edge is a descriptor. Loosely speaking, I don't know what the Latin terminology is for that. I know what it means, I just don't know how to break it down into its more pure definition. So if utilization is equal to 100, I forgot to mention that the whole entire point of me explaining what percent means, you're dividing to find a ratio, and then you multiply that by 100, so you have a linear value to work with. So for every 100. Thoughts on Al from Boston? He's been creating some interesting stuff. My gut says he's a rock star, but I couldn't find any background info on him. If legit, I would encourage everyone to watch. Yeah, Al's a great guy. Al's a fantastic guy. I've talked to him a lot. Um, extremely witty. He's got knowledge across the board. Street smart, but also book smart. Maybe good at coding, but your mouse writing is shit. The unfortunate irony is that I was using the drawing pad. And he's a vet. Yes, he is. I need to fix it. Fuck. I just updated the Discord link in the description. So, give me some ideas. Each of these vertical lines represent a fractal. So you have one giant episode here, a smaller episode here, smaller, smaller. I want to say these are instances of deceleration. Because look at how long this takes, and the fact that you have a double bottom, a double spring per Wyckoff, but you only have one here, and then you have two again, and then one here. What is the ratio for each shortening? That's a great question. I was wondering if it was a Fibonacci time. Can I do this in reverse? Uh, 100 days, 36 days, 20 days, 7 days. A third, 2/3, a third. Huh. This is a third of this, this is 2/3 of this, and this is 1/3 of this. Which is funny because, I'll get to that later. Brooke, send me another tweet. Let's take a look-see.
Hey everybody, my name
Saw dude. No disrespect to me putting this to 2x, by the way.
I'm a animator who lives in America in Texas, and I figured out the fractal pattern on the backs of other people, on giants. And obviously,
Wait, you're an animator?
hey everybody, my name's Brooksy. I'm a animator who lives in America.
Yo, Brooksy? Can we make a video or an animation out of all this?
In Texas, and I figured out the fractal pattern on the backs of other people, on giants. And obviously, this is not something that I'm going to take sole credit for. I don't, want my name attached to it per se. I just want to know, I want the community to know what's going on, and I want to explain it as best I can. So this is going to be my stab at it. Again, doing this on the backs of giants. Okay, I got into the fractal stuff, the cycle theory, like a month ago, and I knew that Astro was doing it, and I listened to guys like Dave, Marino, and I don't know
Dave.
That's kind of where I got started, and I've been an AMC for a while.
Chill. Chill.
Hey everybody, my name's Brooksy. Just saw that this right here looked really odd to me. There was a step down followed by consolidation into a head and shoulders. And then I saw the same thing happening right here where you had this step down consolidation head and shoulders. And when you're in the middle of like a fractal pattern, you can't see it because you really have to see it complete. And by that point, you're already past it, right?
That's a good way of putting it.
And so I think I know some people were like, well, no, this is just an ABC correction. And I didn't really get a lot of replies. So I was like, all right, well, maybe it's nothing. But then when I saw the head and shoulder pattern, because I called it like right around here. And then when I saw the shoulder pattern completing, I was like, no way, it has to be the same. And thankfully, I had some other people in the Discord confirm that. So then I noticed that this whole section, this little weird looking U-shaped run looked the same. And I started looking at what, the similarities. And I posted about it on Twitter a couple of days ago or a day ago. And I thought this is kind of where it stopped, right? Because if you look at this at first, you're like, no, that's not the same as this. And I know that with...
Oh, Brooksy, download the client of this. There's an app for it. It makes your life a lot easier.
Fractal theory, a lot of people were going over, or with fractals, a lot of people were going over to this section. And I'm sorry about my scaling. I have it scaled this way so we can better see what I'm talking about. I don't want to mess with these values. But basically, people were talking about this big dip here, and they were flipping it upside down and saying those match this right here. But that's not actually the case. What really happened is that this is the same as this. And so what I'm going to do is kind of explain, starting with this one, because this is the cleanest looking one. And this should be a good baseline for everybody because it's just really clear. So basically, I will explain this as quickly as I can. And then I'll talk about this smaller one that we're currently in, probably last. But I'll go back in time and then just start showing you why I think the others are there. And it's pretty obvious once you kind of see it and you understand what's going on. So first, the cycle starts kind of right here. This is just where I chose to start it. We don't know for certain, but I did find that.
And on top of that, it can technically change at any time. Your starting point can change at any given moment. That's what makes this shit so confusing.
This particular blue triangle goes all the way back, so maybe I just got lucky. It starts with this kind of blue triangle, which tests. And by the way, I think cycles are kind of amorphous, right? Like they blend one into the next. Like they're not supposed to look obvious, like stopping and starting points. So I put all these lines and markers here to help visually see it. But there are some places in the earlier run where it's like really, really hard to see. You just can't see it. So you can't see it very well unless you know what you're looking for. So this right here is a consolidation, and then of course it breaks down out of this wedge. And I'm calling these the 3 tests, 1, 2, 3.
That's a double Dorito.
Saying that like for a long time we take 4 tests to break out, and I thought it was kind of funny, but it actually is pretty true. Like there's always a 4 test, on the 4th move, you break through major move, So test 1, test 2, test 3. Test 3 is a unique one because it always looks a little flat and weird, and then it rockets, and this is your run. And this run right here is the one that correlates to the run we had to 72, and I'll show you that in a minute. But this becomes a significant one, and then we go back and we test the baseline. So this is B, a B for that, and we kind of consolidate. Sometimes we test it again, sometimes we kind of stay sort of higher up, but this could be drawn as one giant wedge, but really this is a separate section right here. So you have this kind of R2, which is another rise that kind of retests. And then we go down to form another base, and then we have this gap up. And this is a really interesting thing because
Both
it
runs
does gap
correlate
up
to R1.
every time. Like it always gaps up and gaps down. Very strange.
Yes.
Because
if a run doesn't, a run is like it's a test. It's a liquidity test, and that's a Wyckoffean thing. If the run doesn't find the liquidity that it's looking for, it'll just shape and decompose into smaller fragments to then create what would be another test, I think technically, is how you're notating it. So if a run fails, it will segment itself again, and then it blends.
And then we run up. We have
because within all of these there are. I'm not memeing when I say it's all the same, because it is all the same. It's all the same. It's all the same. If it doesn't match on one time frame, you just got to change it. You literally just have to change your time frame, and then it'll start to blend again.
A T4. This is another test. You see how it's kind of flat, and then we get like maybe a little rise from it, and that's kind of like the final hoorah, right, from bulls or whatever. And then we go down. We have another base test on this baseline. Sometimes we gap down, here. Yeah, I think in this case we did twice. We gapped down like 2 different places and gap down over here, but there's always a gap down as well. R4 is just kind of a retest, and sometimes it's really high. Like this could be R3 and R4, depending on the way you want to draw it. I may have not put it in the right spot, but the point is you're going down to B4. B4 is another key one. It always bounces on this kind of old line that we broke out of. Yep. So it kind of completes the test of this. Like we come back to this T3 or a similar line, and we bounce into a wedge. And this wedge, the golden wedge, usually has a hard rebound off of this baseline. You see how it hard rebound off of this baseline? And it sort of sets you up for your head and shoulders. So it hard rebounds off this baseline, gives you a head and shoulder, which we all know.
Check the volume of the calls on January when this went up.
It's a bearish pattern.
I have a tweet. I'll get back to this video in a second. There's a tweet of I was digging through historical options data, and I looked at all of the open interest from January. Mood. Oh, this is worth retweeting. Yeah, here it is. Let's see, AMC from, fuck. Watch this first. Damn, who is he? Who is he? Yo, Jax, what up, man? Okay. Yeah, GME's total call open interest throughout January to June was 213 million. Let's see. From January 1st to February 10th, it was 53.2 million. From January 1st to February 10th, it was 89.5 million on AMC. And then AMC from January to June, and AMC from June to January of 22. You have right here. So, yeah. Gotta use the bathroom real quick. Burb.
tends to be like a bull trap. And you could look at this and say, well, this is a head and shoulder too, right? And I would say, yeah, it is. But in other sections, it's not as obviously a head and shoulders. So I didn't call it a head and shoulders. But I definitely called this one a head and shoulders because it's usually pretty clear. And then it starts again.
I retweeted your video. Be prepared for some pretty frustrated people, but I love it.
Now, if you need convincing, I guess I'll go ahead and do this really quick. Here it is again.
Brooksy, are you in the Discord?
Right. You have this blue wedge. We break down. We form a new baseline.
I really want everyone to see it so we can figure out the volume and time portion. We have the pattern now. Yeah, agreed, 110%. I'm in Dave's? Fuck. What are you doing? I think people get upset, but I just want more help. Yeah, agreed. Agreed. Join my Discord.
Just like over here, blue wedge, break down from the baseline. We have the T123, T123 on T3. We break up. We have the hard run, right? Boom. We all thought.
But this hard run could be a run two of something else. That's what's fucked up.
That was an accident. Turns out it's not. That was
November 21st. And you're on the 15-minute. Right, November 21st?
Right?
November 3rd at 45.86. Yep. Okay, let me clean this up real quick. We should get Rico in here. What's Dave doing? Can you guys tweet Dave? Tell Dave to text me. Uh, Brooks, are you in the Discord? Suggestion, immediately schedule a fractal summit and invite the God Pill. I need to dig into God Pill more. He's been memed too many times, and I'm afraid for the channel's integrity if I have him on here. Anything but Rico. I like the fractal summit idea though. Okay. All right. Where's Goose? Oi.
Yo.
I need help in Discord. I'm
Oh,
hosting
no.
a fractal summit thing is what we're calling it. Uh,
Or just a channel.
exactly. I don't know. Yeah, it needs a channel, and I think that there's a way that you can set up like an event for it. Fuck, hold on, I gotta take
Alright,
this
yeah.
call.
What, so everyone knows what time it's starting? Hello, motherfucker, you there? Astro? You there? The fuck? Um, Astro, I think you muted yourself. I'm just saying. Astro, you've muted yourself. Oh no, you've muted yourself. Oh no. Yeah, you mute Astro. You've muted yourself, motherfucker. This motherfucker chat spam him. He's muted himself. I don't think he can hear me. Astro, you motherfucker! Oh my god! I just called him. I'll just randomly with that.
Is it working now? Okay, it's working. Yeah, thank you. Discord. Yeah, yeah.
Alright.
Sorry, I was
Yeah,
on the phone.
I was like, pick up, fucking say something. And then the
Yeah,
fucking
I was
chat.
fucking. Yeah.
Alright. Yeah, so make
So
an event.
yeah,
Alright, I got you. Do you want it to where certain people can see the channel or everyone?
everyone.
Everyone. Yeah, I can do that now for you.
Okay, all right. I'm gonna hop in there now.
All right, buddy.
Thank you.
You want it in the stock channel?
Make it its own
Yeah.
channel.
All right. Okay. Well, big brain channel.
Yee. Yeah, yeah. All right, I'm hopping. Thank you.
All right. See you again, buddy.
The isn't hiring Citadel employees anymore, and when I was reading it, I think it said like from
Yo, Brooksy, are you in here? Dave. David. All right, cocksuckers, it's time to spearhead this fucking thing. And not market corruption. I mean, David Marino Jr. Fucker! Chat, Dave is pooping. Chat, Dave is pooping. Oh, what? Where's Rico? Where's Rico? Rico, type in the Twitch chat. I'm gifting you a sub so you don't have to see ads. And to get mod, don't fuck it up. There's the double bottom pattern. And I don't mean the fuck. I don't mean the fucking typical double, triple bottom thing I'm talking about in terms of cycles. What's Dibbo doing? Okay, let me fucking wait. Dave's taking a shill. Okay, Brooksy, I'm sorry. I fucking suck at looking at chat. Brooksy, what's your name in the Discord?
Boom! We all thought that was an accident. Turns out it's not.
Sounds like my parents.
That was exactly the way it was planned. And bam, hits up here, goes down to baseline, and then R2. Boom, goes down here, goes on the baseline, goes to R2. And then we have a baseline 2. Just like we had back here, baseline 2. We get a run up and a gap up after baseline 2. All right, baseline 2. We actually have gaps up all over the place here. But the point is that there could be, you could draw the gap here and here, or you could draw the gap here and here, because there is a gap, like it's very minor, right? And there are some places where
Where's
it
Brooksy?
just gaps randomly, like down here, like you can't really always correlate it, but yeah, typically, I think this is not the way I did it. I think this is supposed to be over here. Yeah, because I didn't actually put a line there. Anyways, so here you go. Then you have the gap up, you have the test again, and then the run up, the tall peak, just like you had the test here. T4,
Goose doesn't matter.
run up, peak, little bounce, looks like a little goofy.
Like, I want to get it
looking,
started ASAP.
top
I just didn't
there,
know
kinda
if
did the
having the
same
Discord event thing would be wise or not.
thing. R4, there's the gap down. So after R4, you have the gap down. And then you go to B4 and you bounce and you create a new wedge.
What was the volume of the calls? So this shows that from January to June, there was a total open interest of calls that was the equivalent to 588 million shares. So there were 5.9 million calls. Is it not Brooksy? Am I fucking stupid? Well, we know the answer to that, but
Again, along the baseline that will set up the head and shoulders pattern. And then what we would expect to see after that is basically to form like a new wedge. I don't know where it's going to be exactly. In the
Yo,
past,
Greg, welcome.
The wedge has come down to test both this
Booksy. That's what I've been saying.
wedge where it starts, but it didn't do it here. It kind of like hovers above it, and then it comes down at the last second when it breaks down. But it usually comes down to this area and tests. So if we were looking at that here, that would be here, here, and here. And interestingly, they gave us a nice little wick to touch. So I think it's going to come down to right here, 39.56, and maybe we'll start seeing the wedge.
There's no R. I wasn't using an R.
Or just kind of maybe it'll be a big fat wedge. Like, I don't really know. Sometimes you can see here there's a little bounce.
Yo. Yo. Yo? Yo.
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 Yo! Brooksy. You sure it's not Brooksy, not Brooksy?
It's definitely Brooksy with an R. Is Rico in the Discord too?
Brooksy.
Brooksy, no R.
Yo, is that the man, the myth? The Brooksy?
He's called Brooksy.
Stop lying to yourself, Goose.
He's called Brooksy, not Brooksy.
Goose?
Yes?
Stick to the script!
I'm sorry, yes, boss. Trying to find him. Brooksy.
Yo, where's
Brooksy?
Rico?
Yeah. And then...
It doesn't really matter. You can call
I'm
me.
just just messing with you, man. How you doing? Oh, I think. Are you using the stream to hear us?
Yeah, I can hear you. I'm on the Discord, but it was, yeah.
Okay. Can you mute the stream just so there's no feedback?
Yeah, I turned off the stream. Sorry.
Oh, you're good. Can you hear us in here now?
Yeah, I can hear you in Discord.
Okay, cool. How you doing, man?
Doing all right, thanks.
Good. I'm trying to get Rico in here and Dave
I'm already messaging him.
Schilarino Jr. Um, are you still watching the stream? You just got it on mute?
Yeah.
Okay, cool. Um, so I dig what you're putting up. Um, so I guess what's your interpretation to all this? Like if you had to give like an elevator pitch as to what this all suggests to you, what would it be?
I think you just have to boil it down to like what you had already been doing is
Mm,
kind of correct. Um, so what I think that I found is not necessarily like the answer, the end all be all answer, because really what I found is just like the bones. It's like
right.
this is what the current whatever algorithm, composite algorithm, this is how
Mm,
it's running through the motions of going through this large wedge of creating a Wyckoff pattern, is using the same fractal pattern over and over again as a means to an end. So it's kind of like the tool that it's using. But
right.
typically, the ups and downs on this fractal pattern are the same. And so, meaning like it only flips a couple times. It flips a couple times back in January,
Mm,
where we had like a reverse head and shoulders or something like that. And
yep.
it was the whole purpose of having a reverse head and shoulders where it happened was to get us to the bottom of the wedge. So it like used the head and shoulders that normally is an upward action, it used it to like get us down
Hmm.
to the bottom of the wedge. So it's kind of like um, it's like the pattern that's being used to move through probably what would be like considered like a time cycle, and that's kind of more or less what you've been doing,
Mm,
is trying to figure out maybe on Fibonacci or something like that, like um, how it's compressing those ups and downs
hmm.
through the wedge.
Gotcha.
But the actual fractal pattern itself, and I talk about it a bit in the video, there there's no clear pattern for time and days. It goes from like in the January to June run,
Mm,
that wedge, it's like short, long, medium in
mm,
terms of like the length. And then in the recent wedge, it's medium, long, short. And so it doesn't seem to really align with much in particular, even in terms of volume,
hmm.
because technically where the wedge starts, I guess I would say like the higher the volume probably means a shorter wedge. But then we just went through a short wedge that had like no volume, or a
Right.
short cycle that had no volume. So that's why I wanted to. That's why I came and like started spamming your channel, because if bigger brains get on it and they look and they see, okay, maybe somebody can do like a volume and time analysis. There's
Right.
something else going on um, there's a reason. Like I guess maybe what we can look at next is like start and end points, and
Hmm.
just see like why it picked particular start and end points.
Yeah.
That'd probably be a good place to start. It might help us to understand the time part better,
Hmm.
because as it stands, I don't really have an answer. I could
I
tell
don't
you
either.
like the exact amount of days. It was like that the where the fractal repeats.
Hmm.
You know, it's 21 days. This is starting in January 19th, right? So it does a 21 days cycle, then it does a 64-day cycle, then it does a 40-day cycle. Then we have the run up, and it does a 58-day cycle, then a 90-day cycle, and then a 27-day cycle. And
Can you share your screen real quick on Discord?
sure, yeah, I can do that.
Because I want to see because it looked like you were on the 15 minute. I wonder if it still holds when you switch to the 30,
Oh yeah,
or
it,
if
it does. When you're on like the 1 hour, you can kind of see it too, but there are some places in specifically in the January run that it just doesn't like I'm on.
places in the January January run. What? I can't hear you.
Yeah, he's not.
Okay, how's that?
Yeah, there you go.
Okay, it was on push to talk for some reason.
Goose.
When you're in the 1 hour, you can see these is pretty clear on these time frames.
Mm-hmm.
But even when you look at the more recent one, it gets kind of, I don't know, it's probably just font sizes, but you can't really see all of the stuff very clearly. So I switched to 30. When you're
Can you
on
click log in the bottom right? You'll see reg adjusted. Yep, there you go. And then
so if I do that, probably all of my markers are going to be off.
try to click auto real quick.
Okay, actually, yeah, that helps.
Yeah, they might be a little bit more crammed, but log is just
Yeah.
it's removing the. You can whatever you prefer, but log is what I like to use just because it treats movements individually.
So I guess if I were guessing, I would say it wants to do this as the up, right? So if you're looking at a big wedge, this is the up, this is the up, this is the down, this is the down. It kind of plays out the same way each time, albeit smaller. Maybe it's as simple as that, and like
Right.
time has to do with preset date. I put out another tweet that probably didn't get your attention, but I don't know if y'all noticed, but all these lines that kind of like track to 72 are like super interesting.
Oh
And
yeah, yeah.
basically did a fib fan, and I posted a lot about it, but essentially like it's like this mythical target that the computer has, and I think it's like an upper range. I know that this is like crazy talk, but I'm
No.
fairly convinced. I've done enough of it at this point and seen enough that I really do think that it's like anytime the Bulls are in control, it plots a course to 72.
Right.
And when the Bears are in control, it plots a course down to like 80 cents or something. And even here, where these look like they're starting to drop, if you look at like where they converge, I've done
Right.
enough.
It's kind of like a boundary
it's right
condition.
around here. Yeah, it's weird because it actually has like a time stamp on it almost. Like when you actually do it proper, it actually lines up with 72. So it's very odd. I think the computers have like thresholds. Like they have an upper limit and a lower limit.
Yep.
And so why am I saying that? I'm saying that because I think what that means is that it calculates maybe at the beginning of the cycle. It calculates based on what happened previously, how long the next one should be, and then the next one. Like it knows it's going to form a wedge.
Right.
Because this is the price action that has to be taken for this kind of accumulation.
Mm-hmm.
So the computer says, hey, I'm going to form this wedge. What kind of volume did we have previously? What did the price action look like? And in this case, it's bonkers, right? I talk about it in the video, but I actually think this got flipped upside down because this would have been normally a gap up, a gap down, and I think it reversed.
So the way I've always thought of that was January was such an anomaly to it broke the constraints. They turned off the buy button not as a way to preserve capital, but to preserve the game entirely, is what I think, because of how tangled up everything is in markets. This violated a lot of whatever conditions, if you will, that those who are responsible in all of this had going, that letting it go any further would have destroyed everything for them. So the way I've always,
I agree.
Yeah, the way that I try to interpret all of this is that the path is and not in absolute terms, but the path of wherever the chart's going to go is predetermined.
Yes.
To some extent.
Yes.
There are variations of it, and the speed at which that can be illustrated to people like you and me, us fucking plebeian retail investors. Think of it as like ink and a pen. right?
Right.
And the more ink, the more volume, right? So volume is what allows the chart to continue going, vertically speaking.
Right. Yeah, that's really good. Yeah, so I think you're right. You see this drop in volume, and it just kind of shifts. When I was doing this earlier on the other Discord, I was doing it live, and didn't think this matched at first, but then when I really went and looked at it, it still does. I think the algorithm was still going. The buy button screwed up the volume metrics, and then we just had chaos. But like this is the same. This one looks really similar. You get your gap up, your gap down. Like all the other points are right where they should be. It's just stretched out and weird looking. This is where we get a little variation. This is important because this is the same variation in a way that we end up getting up here, which propels us to the 72 move.
Right.
But this is what I meant when I said I think the algorithm, what it likes to do is try to get us from like A to B. And so in this case, maybe everybody was drawing it like this or something. But in this case,
the constant bull pennant that becomes another bull pennant.
right. And
Yeah.
you have, so instead of, in every other situation in the recent timeline, even right here, the head and shoulders goes up. But it didn't reach the bottom of the channel, so it went down instead. Like,
Right.
it didn't reach the bottom of the pennant, so it flipped it, which is super odd.
Can I show you
But
something that might help answer this for you?
Yeah.
Okay. So along the toolbar, you'll see an eyeball icon. It's the second to last on the left. Left-hand side, all the way down. Yep, click that. Okay. So it's just hiding your drawings. I didn't remove them.
Oh, okay.
Click auto in the bottom right. And then change your time frame to a 2 hour, which is in the top left. You'll see 1H. Yep. And then to the right of that, of the 2H, click the candle icon. Change that to Heikin-Ashi. It's halfway down. There you go.
You're like Japanese, right?
Yes. So what this is doing is it's illustrating between all the gaps, and it allows you to spot trends easier. But you're losing granularity of open-close detail. But it still illustrates the same points. So now click auto again. And zoom out so that you have from January to present. Actually, to illustrate it even better, zoom in from January right until the June run.
Like that.
Yep, and then stretch it vertically. So you have more depth to the movement. Yeah. There you go.
Oh, come on.
You see how everything seems to, if you were to think of this as like a piece of perforated paper from left to right, you see how everything kind of folds in on itself?
Yes.
It's all delta neutral, like especially from mid-April to early May.
Here.
See how it just, yeah, you see how it completely just, it virtually undoes all of the movement that had been created before it. And then you look back even further and it's doing the same thing, and it's constant, it's like an accordion.
Yeah.
And that's what really struck out, that's what really stuck out to me when I was first realizing all this madness, was that no matter what you do, it seems like it still has rationality to it, even for all the anomalies that these stocks are said to have. And you know, they're extremely volatile, but then you look at this and it's actually one of the most predictable isn't the word to use in this context, but it's one of the most monotonous, right?
Mm-hmm. Yeah.
So to me, look at mid-April. Are you familiar with the double Dorito pattern?
No, not like you call it, but
So the double Dorito is, you see those two triangles that you're hovering over?
these two? Down or up?
down. So be April or March 26th, that run up, and then it falls down, and then it runs up again and falls down a little bit
Yeah.
lower. So look at how from March 26th to where it bottoms out at, right before its next run. See
March,
how
I'm
that's
sorry.
like a right triangle? If you were to draw a support there, it would look like a right
Yeah.
triangle. And then it does it again, but it falls a little bit lower.
Yeah.
And then if you look at right after that, which would be April 13th-ish, that's another instance of it, but smaller. It's on a smaller time frame to the right of that. That's the same thing as this over here, to the left of it, the bigger version. Yep, same thing. My question is, it's constantly replicating itself, but it's never. The start point and the end point are constantly changing, right? And you can't draw the full picture until you establish a start and end point.
Right.
When you set up those constraints, though, anything outside of that scope is invalidating where you set up your start and end. So it's forever changing, but because of that nature, it's also theoretically always over. Does that make sense?
Right.
It's
Yeah.
so take that principle of where everything seems to just cancel itself out and look at from June to now. So forget January to June. Just consider where everything stands right now. The other misconception that some people get is that January is the start of the cycle, and it's not. It's February 5th when the buy button was turned back on. That's when the cycle started. It's like everything that had happened, everything that they were trying to avoid when the buy button got turned off has been put into a fucking credit card plan. So they're buying time, with the inevitable being whatever the price should have been in January.
I see what you're saying.
On top of all the other pressure that has surmounted.
Yeah, I see what you're saying.
One last thing. You see the look at from what would that be? That's August 16th, I think. August 16th to where it retouches in October. Can you on the left-hand side of the toolbar, the second option, you'll see a line or like a array. Click the arrow icon of that.
You want to do the arrow?
Yeah, it's right under the arrow, and do a vertical line.
Here?
Press escape. Yep, and then delete that. Delete the arrow. Go to where the arrow was in the toolbar. Click the little and click vertical line. It's halfway down, I believe.
Oh, vertical line. I'm sorry.
Yeah. No, you're good. So that is August 23rd, I believe, is the start. A little bit to the left of that, right where it starts to climb back up.
Here?
So right after it bottoms out and it starts to climb back up to your run one.
Here.
Nope, that last red bar. Yep, perfect. And now, yep, right there. And now I'll do another one and put that on October, I guess that'd be 1st, wherever it reaches the bottom of its original run.
This run right here, you mean?
Right there, yep.
Yeah. September 30th.
Oh, I can't fucking read. Okay, so everything between those 2 points, right?
Yeah.
That's what I consider to be the origin fractal. This is what the entire chart is trying to illustrate over various time frames. If you consider each of those phases that are in that. So you have your test 3, your run 1, run 2. Imagine this as being like a conveyor belt,
Mhm.
and the speed of the conveyor belt, or the conveyor belt has the chart on it. The speed of the conveyor belt has to do with volume, but the chart is constantly showing you this little lens of that conveyor belt, just a piece of it. And as time goes on, as that conveyor belt rotates, that's you seeing the chart. It's like old school film.
Right.
Does that make sense?
Yes.
So um, the the values of how extreme these movements are in relation to how much time is left to that instance, that piece of film. If they took a long time to occupy the last half of this fractal on the chart, then they have little time to complete whatever formation they're trying to make.
Right.
But that also simultaneously affects the future instance of it and the previous instance of it. So you would have a much more violent recovery with it, because this one pattern is aiming to have the same start and end point. Everything in between is just noise. It's like someone is trying to pass shares through the exchanges as innocuously as possible.
See. Yeah. Well, if we looked at that and looked at it just in a specific area of the run, that's right before E3. So the odd thing is, I think you could look at this a couple different ways. Look at this as the head and shoulders. In this view, it doesn't really look like it. Um, you have to say that.
One last caveat. Any part, you can look at any part of this chart and you can fit it into that pattern I just showed you.
Yeah, I see that. Here to here.
It's the same concept as what you see on the 1 hour is filled with the same pattern on the 30-minute, the 15-minute, the 5-minute. The variations of it are based on the ultimate direction of where that 1 hour is trying to go.
Hmm.
Goose, can you see what Dave and Rico are doing?
Dave's being a shell. He ain't replying.
Usual.
I think he's asleep. And Rico, I'll DM it to you.
Yeah. So, yeah, I think I understand what you're saying. I guess my question is, what causes whether or not this is part of the tease or this is like part of this.
It's
I don't know if it
That's
really
the thing,
matters.
man. It depends on what lens you're looking at it through. Are you in the present,
Yeah.
past, or future? Because
Right.
a run in the present is actually just a test of the future.
Yeah, that makes sense. I guess I'm trying to figure out what would cause. I mean, aside from volume, just volume ramping, what would cause it to suddenly and being at the end of a wedge, right, or something like that, where a natural volume influx might occur. I know what you're saying about like wanting to have an outcome that basically just kind of cycles, from one point back to the same point again, over and over and over again.
Right. You
Um,
have to have a start
that
and end point. It's very quantum-esque in the sense that when you start to measure things, you're instantly ruining the integrity of the data because you're removing possibilities and also making possibilities at the same time.
Yeah. And well, that's the thing is like I didn't feel like when I was looking at the time, I wasn't sure if that was even significant because, like I said, none of them line up and didn't really seem to matter. Um, but I guess my thought is like, if the goal here is to, I don't know, like trick or something, or like get the program to do what this algorithm to sort of do what it should be doing, right? Which is not recycling the price over and over, but moving to like the desired price target, right?
Right. Let me also give you what is a boundary condition. Um, are you familiar with how shorting works?
Yeah.
Okay.
Where you're quote unquote borrowing a share and
Right. Right.
selling it to the market.
The the industry standard, if you will, for when a short position goes bad, like when you need to exit because this thing that I'm about to talk about is introducing risk, is what's called
Right.
days to cover.
Right.
Days to cover is it's a metric in days, obviously, but what it does is it takes the total short interest of a stock, and the short interest is just how many shares are marked as sold short that have not been closed out yet, divided
Right.
by the average daily volume across some arbitrary period. Typically, it's either 10 days or 30 days.
Right.
So if your short interest is, call it a million shares. No, we'll make this really easy. If the short interest is 100 shares, and the average volume comes out to 100 shares in volume a day, 100 divided by 100 equals 1, right? So it would take
Right.
1 day to cover. If the total shares out that are marked as short is 200, and the average volume is 100, that would take 2 days to cover because your average volume only allows for whatever that's your bottleneck. Does that make sense?
Right.
So
Yes.
in the world of stocks, whenever you have a days to cover that is greater than 1, those stocks typically become targets by bulls, because to me, I don't consider it a very relevant metric, in the sense that if your days to cover is 1.01, like
Mhm.
you're not going to be in too much trouble. But in the world of Wall Street, where you have to have absolutions all the time, and you are, responding to somebody every hour, sometimes every 30 minutes, about how the P&L is, or your beta and alpha with everything else going on in the market, and what's volatility like, there's some times where you can't have that on your balance sheet because it introduces tons of risk. And these people aren't worried about having hundreds of percents in returns in a single day. They want percents of consistent returns over years. So
Right.
when days to cover exceeds the value of 1, there's a couple different ways that you can navigate that. Hedging, that's pretty self-explanatory, but you can buy
Right.
calls to some extent, and you're gonna have to weigh out that math to make sure it checks out. But you can hedge for if you are targeted in your short position. Um, my point in all of that is volume has to be at some level every day, and it's a
Right.
sliding gradient, because, and this is something that I really want to dig into. I don't have the fucking brain for it, but I think that you can reverse engineer these days where volume is piss poor, right? If you assume that that's all just dog shit, that's just
Right.
volume for the sake of volume, so that days to cover doesn't skyrocket,
Right.
then
Yeah.
you can reverse that somehow. And if you can define your start and end point, you can theoretically calculate how much short interest someone is trying to hedge for. Because if the average
Oh.
volume is 20 million across 30 days, and we know that days to cover has to be less than 1 or equal to 1, then you can
Gotcha.
assume that the total short interest that is of concern is 20 million shares.
Right.
So volume has that's one of the constants that we can derive from this, is that volume has to occur, and that the floor of that has to be whatever days to cover would come out to. The reporting interval on days to cover is every 2 weeks. There's a publication from FINRA that is collected from all the participants that operate under FINRA. So Citadel, Susquehanna, uh, your usual suspects. Uh, Obviously, the integrity of that data is pretty, we all have our questions, but for the
Right.
sake of science and all of this, let's just go by the behavior of it. Every 2 weeks is when you will see one of those reports being published, and it's typically 1 week or a few days before, halfway through that 2 weeks, that you'll see some form of hedging or covering for that designation of shares take place. So 2 weeks, every 2 weeks, should be something to look at I need to send you the schedule of that, because when you put those dates on the chart, it illustrates even more. Sorry, I know that was a lot.
No, it's good.
Do you mind accepting my friend request real quick?
What's up? Oh, sorry.
You're good.
Welcome to the church, motherfuckers! Astro, you are shall get real lol. Preach it, bro.
Suck my balls, boom boom. Yo, is the cycle theory out of the window? Absolutely not. I went over this yesterday. I showed how it's all continuing to ripple itself, and look what it's doing now. It's the same thing. Dear Astro, please save this video / explanation for everybody. Yeah, I got you. I got you.
Is there anyone else you want on Astro?
Just Dave and Rico right now, if possible.
Alright.
All right, Brooksy, check that out.
Okay. Yeah, I got it.
So when you look at those dates, and if you use the vertical line to
Yeah.
depict
Do you
those,
want settlement or due date or publication?
publication date. I just realized I can make this an indicator. On
Oh yeah, look
TradingView.
at
Yeah.
that.
So I made a video about this back in June of how this is one of the few constants to navigate by in all of this, and it holds. There are a handful of instances where you'll see that the date of a publication doesn't result in a run, and that's just because it was hedged for before that due date, or hedged earlier than expected.
Yeah, it's right here. It's at the R1s.
Yeah,
Oh, okay.
yeah, and then that the very first date of the 21 schedule is for January 27th.
Yeah, that's where I'm at. I put it 19th, but this probably lines up with the previous one or something.
Yeah.
Even back here a little bit.
So the market mechanic lens theory that I have is that shorts have not covered, plain and simple. A few of the smaller fish might have exited, but those guys are crumbs in comparison to the absolute crock of shit that the bigger players have. The thing that's happening, in my opinion, is that the options chain is being used to hedge all day, every day, to move this short position throughout the chart. That's it. It's the options are paving the way.
Yeah.
That's all it is. So.
Well, this is cool.
Yeah, something to play around
I'm
with.
not happy about it, but this actually puts a lot more story behind these markers that I came up with.
Yeah, it's pretty eye-opening, isn't it? Especially when your observations become substantiated by something. Like you were observing the shadow, but you were able to find where the actual thing of the shadow being casted was.
So you're saying, and I agree.
And you're allowed to disagree with me, by the way. you're allowed to. I don't want that to be taboo.
Well, look at that. Look where the intersects are.
Yeah.
They're all kind of around the same level. They're able to make this one maybe not as much because it got a ramp up.
See how they keep anchoring? Like if you removed all the candles in between those intervals, you can see how
They're
it's.
trying to get back to the same place.
Mm-hmm.
Each time they have to cover.
Yep. And here's and I think this is where we can find or derive momentum in the charts from. Is every time, like, their objective is to keep the price at the same spot for as long as possible, right?
Right.
But the interval at which that you're sampling that price is not in minutes or hours, it's in days and sometimes weeks. So there's a lot of noise that happens in between all of that. If that noise becomes too loud, it's going to mess up their hedge in the options chain, because options derive their value from more than one thing. It's a multi-curve price model, right?
Right.
Because there's what is it, 5 or 6 different Greeks, but the one that is of concern for them is Vega, and Vega derives its value from implied volatility. Implied volatility is a conversation of its own, but anything that goes outside of a particular model will increase the percentage of implied volatility, and you also have historical volatility. But point being is that anytime that you have tons of noise in between each of these 2-week reporting periods, it's creating a residual multiplier in this that continues to accrue, right? So
Yeah, I guess I'm not trying to figure out what. You say noise, you mean like when it's disrupting where it thinks it should go, or like
yes.
where
Oh, I'm
it's
sorry.
plotted?
So if
A deviation from?
sure, yeah. So if they need it to be at $40 every 2 weeks, right? It
Right.
needs to start at 40 and 2 weeks later be at 40. Everything in between those, the start and the end, relative to historical and implied, if that exceeds uh, those values, then implied volatility will go up because it's literally becoming more volatile.
Right.
Volatility, put simply, just think of it as the opposite of predictability.
Right.
But that's across a gradient of intervals that can be on the minute, 15-minute, 30-minute, 1 hour, 1 day. But that those all coalesce, those all compress into each other. There's 15 1 minutes and 15 minutes. So you have a gradient. Especially like the past couple of weeks where like we open at one price and we'll go up 5 or 6%, and then the last 2 hours of the day just fall back down to where we opened at.
Yeah, no percentage gain. So you're saying they're just trying to get back to the price they wanted.
Yes.
Or are you saying that's the noise? I'm sorry.
The noise is what's happening in between the start and the end. And the volume of the noise is just a euphemism for volatility.
Okay.
So the more volatility, the louder the noise is.
I heard a lot of people saying that less volatility is good, though. Are you saying that it's not good?
It's not good. No. Obviously, it depends who you are, but if you're trying to trade options, generally speaking, less volatility is good, because that means the amount that you have to pay to get in is less, because Vega, the Greek responsible in that part of the pricing portion, will be less. But in the instance that we're in with this and GameStop, you want IV to be high. That's what allows for more movement. And you'll see, like, when you get these random giant green candles, right? That is adding to volatility. Obviously it's all relative, but when you see that happen, it'll become more and more frequent. It's like a boulder, right? On a level plane, but the more you push it, the more momentum it gets, and then eventually it picks up enough speed that it will find a point at which there is a decline to gain its own momentum from. Yeah, pretty fucking crazy shit.
Actually, makes a lot of sense.
There's a lot of parallels between the stock market and the world of physics and chemistry and any natural sciences.
No, it makes sense to me too. Just so my I wasn't really thinking about anything but like visual information, but I was thinking about this idea of like these sort of like terminating values. If you have like a, I'm not saying this is true. I don't know.
Mm-hmm.
If you had like a maximum level,
Right.
I know that this is kind of going off the rails a little, but if you had like a min or max level, and most people when they're drawing these lines, they're just looking at where it rebounded, and I agree, like that's
I see a lot of
basic
people saying
stock stuff. I mean, you
1126.
should do
What
that,
range are you looking at?
but I've been just really looking at where they're pointing and what would if the stock were allowed to continue, like where would it go?
Yeah.
This is what I was talking about with the fib fans stuff. Like there are these lines that seem to accelerate,
Mm-hmm.
and they do seem to like pick like an earlier quote unquote target, if you will.
Yeah.
But if
You might
look
want
at,
to turn
like,
off
this
log because it'll mess up that linear property you're looking for. If you unclick log in the bottom right, that'll.
yeah, it just come on. Well, yeah, my point is that like if the stock was allowed to continue to just go indefinitely, right?
Mm-hmm.
Like where would it eventually hit? And I know that BAM guy gets a lot of crap, but he's probably using something really similar. He talks a lot about
Bam is a great friend of mine.
Well,
And
I
I
don't
love the
know.
guy, but yes, that is one of the considerations that his model uses.
Okay. I just figured like when you look at it like
Those are what are known
over
as speed
time,
lines.
yes, speed lines. That's exactly right. And like I don't have like a formula for it because I'm just a random dude who's just looking at charts.
Man, that's
actually,
what I was 9 months ago.
I'm gonna use log for just a second. I know that it's percentage, but it actually makes
It
it
helps
a
a
little
lot.
easier visually because I get kind of stuck. So I noticed that there was sort of a terminal date for a lot of these sort of trends that were pointing just past where we actually had our run up, and it actually might end up coinciding with this. But it's really odd to me because I just don't see how. I mean, like, and you can draw these different ways, but I kind of think that it's like a tug of war, right? And every time you have a market that you know wants to be bullish, and some of these they kind of like deviate quite a bit. Like going up to I think it was like January or something like.
So here's
you
the
can see-
conundrum. Here's the conundrum.
Yeah.
Take note of where you're at, and reduce your time frame.
See, like, huh?
Like,
Reduce my time frame.
change from the 2 hour to like a 30-minute. So now you have 4 times the granularity relative to being on the 2 hour.
Yeah. Yeah.
And that's where the madness begins. Is the value that you get in getting more detail by going to the 30-minute is hindered by the value that you lost in noise. You're gaining more noise in that.
Right.
But you have more detail.
Well, this is where I started with that fib fan theory. Was that there was like just this idea that there's like a simple, it's an ever-changing formula because as this gets more parabolic, And I compared it to like an archer with a bow. Like you're looking at a target over here, and if like
But it's
this were allowed to
moving.
continue on this trend, it would just kind of go up this way, and eventually you can't do that really. That's not the way the market works because there's obviously all these other factors at play. But I was thinking like, and that might be what we're talking about. We're talking about the same thing. Is that when you get to a particular place in time, right?
Mhm.
You have to be. So I was thinking like an archery because I was thinking about like targets
Mhm.
on top and bottom, and if you're riding a horse or you're just running, or I don't know why you'd be running with a bow, but if you're riding a horse,
So
it's
so
very
I know
lost. But
the
yeah, you have
the
like
concept
a
of being on the
pullback.
horse, so that you have a constant distance between you and the target. The
Yeah,
horse would
but
be the
you're
hedge,
always moving towards it, right?
right?
So as you come towards it, in order to hit that target, right, you have to have more pullback on the bow, and it doesn't normally it wouldn't work out, right? But as you get closer to these kind of massive volume spikes, you really
Mhm.
see how, and this is just parabolic movement. I know it's not like complicated. You see how there's like this really clear like shift, right, where you get more
Right.
and more and more. It was really evident. I know my
It's like
chart's
a
kind of
fulcrum
messy,
point,
but
kind of.
yeah, it was really evident for the 72 one because I just saw like, okay, well, there's one right there. Like it wanted to go to 72 here,
Mhm.
you can see that. And then you can kind of keep going back and it just like all of them are like, hey, let's go to 72. And
Right.
then the market was like, no.
Right.
Um, it's really
Fine.
odd. And I thought it was just really weird that it seemed to coincide with a date, which is not normal,
Well, that's
right?
your think about it. That's
Yeah, like
the
all of
date. The
these.
date is the target. The target is your price. The distance to that target is a date.
Right.
You have a
Exactly. And
line
I
which is
just,
one dimensional, but you need two dimensions to make it happen.
yes.
A
And
time
it
and a
won't,
place.
exactly. And it's just really odd because I guess I was thinking like, one of the things that everybody was talking about when the buy button was removed, and I did not, I wasn't in this run. I got in like later, like
Hmm?
down here, this area, April. But one of the things that was odd was that everybody was talking about like, well, what price should it have been, right?
Right.
And like I don't know, I'm not really sure, but I guess like yeah, you could use like speed lines and just draw it and see where it hits. Um, Maybe it doesn't have to line up with any particular date, but I kind of like hypothesize that there's something about this to me that's just super sketchy. Like that percentage wise, that all of these kind of days would, and they're not all the same. That's why I use the fib fan, and when I use the fib fan, things to me
You,
were like,
you should try the
hurt
GAN
my,
box.
it hurt my brain because I was like,
Yeah, try
oh
to use the
snap,
GAN box.
what's the gam box?
Oh, you're gonna love it. And I gotta jump in a few, but in the top right, see where it says fractals,
Oh
where
wait, hang
you
on,
had saved
sorry.
your template.
Yeah,
Make a new chart real quick. And before you click, oh, you're good. Never mind. Never mind.
oh, I don't have like the cheapy plan. Yeah, let me just
Uh,
I have to
save
switch
that
the.
real quick. Save that. Actually, better yet.
I only have like four, so I just kind of whatever. But
Yeah, sure.
let me just save it and then I'll just get rid of everything.
Yeah.
I'll get rid of that.
The GAN box pretty much it. It's like an all-in-one, where you have your fib levels, your fib fan, and then the GAN box itself is a Fibonacci approach to cycles and time.
Okay. Is it over here?
Yep. And
GAN
then
box.
yeah,
GAN uses like the 45 degrees, right?
yeah. I'm sorry, it's the
What is
GAN
it?
square.
I picked the
That'll
wrong
that'll give
thing.
you your fib levels.
The fixed or the regular?
Just the regular for
Regular.
now. Yeah.
Yeah, okay. Yeah, this is like everything that I was kind of overlying anyways.
Right.
Yeah, but even here, like you can see that the this is another thing because I use the fib. Excuse me, I use the fib. What's it called?
Spiral.
Yeah, something
Yeah.
like that. It was like let me get on like the. Hang on. I can zoom around a little more. But
I
yeah,
gotta
you
jump
can
after
see like
this.
the speed fan. You see these like the way these are. And they correlated really well
They
with.
capture each. Yeah.
Yeah, they
That's
kind of
interesting.
capture each of these. Like it's trying to be stopped from going that particular direction. And I just think that's really weird because there shouldn't be
Right.
like a limit. Like a stock shouldn't have a limit, right?
Right.
So why would you target a particular number? So like I guess it was, which one was it? The corner one. Let me show you with that one. 'Cause that's very similar. Oh boy.